Good evening, all. Welcome to our quarterly meeting, and we'll be looking at the turnover to the end of March. Good evening, good to all. We're going to start our presentation talking about our employees, our teams. So, stability in terms of trends in employee numbers. We've recruited 35 people over the first quarter and 25 departures. So we have a positive balance of 10 people, 10 new employees. We pay particular attention to departures, and then we've been keeping an eye on those figures since last year. Reasons for departures, looking at each individual case to identify the reasons for those resignations from our group. We're going to have a look at turnover. That's the publication of our turnover to the end of March 2023. So we've got a good start to the year with increase in 10.3% to constant scope. And if we include DPI, we've got a 90.5% increase in turnover. We've got, of course, the inflation effect to the end of March 23. We estimate the impact as we've done in previous years, and we did last year. And we compared the prices from the end of March 23 to the end of March 22, and that gives us 9.6% inflation. If we take this figure, it reflects the increase in volumes, which is in fact 0.7% to the end of March 2023. So this volume effect, we find it particularly in the Pro channel, and in that Pro channel we have the three major subsidiaries, Thermador, Sferaco and Jetly, and all those subsidiaries have shown good progress in their turnover, as you saw in our letter to shareholders number 110. Retail, however, shows a drop in volumes because of the decline in households' spending power. Domec, however, through its generators products, have shown progress. Audrea merged at the beginning of the year, one of the projects that we announced last year, and the legal IT and social employment merger took place for those four sites, 3 in Spain and 1 in France, and 3 in France, and 1 in Spain. So it was a slow start of the year because we had the IT migration to complete, and so Audrea's figures of plus 5% turnover is very good because they did have a very difficult start to the year. And congratulations, and we encourage the teams of Audrea to continue to take on the new IT programs to be able to be more and more effective in what they do. So well done to them. They're really committed to that project, and that's also thanks to the help from the IT people from Thermador Groupe through December and January and February. So we're going to look at this curve we show every quarter, organic growth per quarter over a long period of 5 years. We note that for the first quarter of 2023, we're in a situation of continuity, but with inflation, as we had in 2022. Now we're going to look at the new housing market in France, which, as we've been saying for a few months now, is declining, both in terms of the number of business permits that have been accorded, but also in terms of building starts, and a substantial drop there, which could get down to 350,000 units over a period of 12 months in France, and that would be a low level. And as you see on this curve in history, we have actually been below 350. We need to keep an an eye on that month after month. We have two subsidiaries impacted, Thermador and PB Tube are impacted in the group. But in terms of the group, that only represents 10% of our consolidated turnover. So the impact, of course, is not so great group level. Next, we're going to look at the figures that we get from the trade associations for distribution of heating, sanitation, air conditioning, piping equipment. It shows us the trend for the beginning of the year with a good first quarter overall. But you can see from January to February, February to March, declining figures, 15 to 10 to 7, and that dovetails with the ideas that we put forward at the AGM, saying that we were undoubtedly looking at a slowdown, or certainly a lower growth in the months ahead in the retail in these markets. So for the DIY superstores, we don't have figures yet from Innoa. They are what we call the brico-brief figures, and because of poor coordination, we've not been able to get those figures. But qualitatively speaking, 2022 ended with a drop in volumes of 15% on the retail market, and particularly the garden sector, which is down 40%, and tooling down 19% in terms of volumes. The beginning of 2023 is showing a similar situation to 2022. So it's not a great outlook for those markets. We're going to look at the PMI index for France, and that's an index which looks at manufacturing activity in France, down and below the 50% mark, which suggests that we are in a period of decline, and we find exactly the same situation in Europe, under 50 points. So that means that manufacturing activity in France and Europe is down, and it seems to be a longer term trend. In terms of prospects, first of all, macroeconomically speaking, we can expect a slowdown, an economic slowdown, because of the effects of inflation. For us, we feel that even though today at the end of the first quarter we've been able to pass on 9.6% of our price increases to customers, we think that we will be finishing the year with a consolidated figure over the year passed on to the customers at about 5%. It's very substantial, of course. In the building sector, good prospects because of the energy renovation program, or energy optimization, will promote activities around heat pumps, solar water heaters that Thermador sell. We also have a lot of hope in terms of the heating and cooling ceilings for heating and cooling, and it's a very cheap alternatives for cooling and heating. And we've also got dual flow systems from XLR, which is supported by MaPrimeRénov', and this is equipment that, when it's properly installed, can be very efficient for buildings. And also we've got meters, water meters, energy meters that Severaco sell, and they will continue to be sponsored by the energy renovation measures of the government. So fairly positive outlook for building. So the public authorities have increased the funds for MaPrimeRénov', which will certainly increase the disposable budget available to households. You've also got the certificates, the energy saving certificates, which are financed by energy suppliers. In industry, we're we're hoping to gain market share. As you've seen, it's not developing in Europe, but our market share, our low market share in Europe, means that we can find growth, market share in the public sector. We know that 23 is going to be a difficult year. Prospects are not very good in terms of growth, so we're going to have to hold on tight in order to resist drops in volume. In terms of export, we're still looking for market share because our turnover in different European countries and the few African countries where we're working are fairly modest, fairly low compared to the size of the countries that are involved. So we've still got opportunities for growth in those countries. In the swimming pool market, you can't see it on this slide, but I wanted to talk to you about that. We talk a lot about the dangers, or should we say, the negative publicity that swimming pools are getting in the public conscience because they consume electricity and water. We have solutions with ILO, with our subsidiary ILO, to build or maintain or renovate responsible swimming pools which don't consume too much water, don't consume too much electricity. So we're going to promote them to promote their concepts and be able to stabilize that market, well, uphold that market. Patricia, you're going to talk to us about investment interest rates. Sorry. Yeah, so we're exposed, which is limited, to interest rate rises because all our loans are fixed rate loans between 5 and 7 years. And so the two loans we took out last year was at a time when the rates were still fairly low, so no exposure in terms of those financial charges on our loans. But for our subsidiaries who are managed in a cash pooling system, they are exposed because we have a system whereby some subsidiaries are using cash, they consume cash, they're there, so they're negative in terms of balance, cash balance. And then we've got others that are in credit, and they produce financial products, but mechanically that gives the subsidiaries a motivation to better manage their cash and optimize their working capital requirement. And over the quarter we've generated 31 million euros in cash by reducing costs, stock also. But we've got high interest rates, so we need to work on that, and that will motivate those subsidiaries to do so, to reduce their stock too. In terms of costs, as we mentioned at the AGM, we had an average increase in salaries of 4.62% in 2022. And mechanically there will be an increase in salaries in 2023 too, but there will also be an increase in transport costs and energy costs. Another item, in spite of our energy saving plans that we've put in place, we are faced with an increase in energy costs, and of course that will cause pressure on our operating margins in 2023. Concerning investments, we have a total investment planned of 8.5 million euros, of which 4 million will be dedicated to energy renovation, and in 2023 we will continue with the energy renovation of our buildings, and there will be an extension to PB Tube's warehouse facility, which will allow them to stock their tube products and take on stock from their sister subsidiary Thermador. In terms of integration and organization, we've purchased the company DBI at the end of October 22, and we continue to integrate them into our reporting scope. And so those are one of the operations that will be carried out over the first quarter. So we finalized the development for the migration of Audrey, and that will certainly keep running till June as a project. We've opened a new e-commerce site for Thermador, for industrial taps, for wholesalers, and we'll continue to open new e-commerce sites for PB Tube, and then ILO, Safeco and Sodeco. There's no particular order to that, but those are the subsidiaries that will be concerned for those subsidiaries e-commerce sites. Okay, we've also got the customer relations management project for the office-based staff and for traveling salespeople. And finally, there will be the update of our ERP, the Enterprise Resource Planning Program, and the migration of Thermacome into our group ERP system. And that's part of the integration for the subsidiaries that have joined us. So that will be a project for the second half of 2023. I'm going to pass back to Guillaume, who's going to talk to us about the stock market performance record. So as we have done before, we show you the reinvested stock price over a period of 10 years, which you can find on our website. You go down from the home menu and you'll find that curve, and that allows us to compare over a period of 2, 5 or 10 years the reinvested dividends with Thermador Groupe compared to the CAC 40, and that's a good judge of performance of a stock market, of a stock. And so if we take the recent measurement from the 13th of April over a period of 10 years backwards, we see that Thermador Groupe's performance in terms of interest per year is 17%, compared to 10.6% per year on average for the CAC 40. So we've got a very high level of return compared to the CAC 40. As you know, you'll have seen that we detached the dividend on the 12th of April, and you'll have seen that day that the share price went down approximately the same amount, which shows, as we say every time, the payment of dividend doesn't necessarily make the shareholder any wealthier. But in any event, the equity of the shareholders remained about the same, and that was paid on the 14th of April. We finished with our presentation, and now it's over to you to ask your questions. I've already got some questions coming in.
Alors, on me pose la question de savoir s'il serait pertinent pour le groupe Thermador de racheter cette société, les robinets Sego.
The question is whether it would be interesting to buy the company Robinet Sego from the Velon Group. Honestly, I wasn't aware they were for sale.
D'accord. Alors, je vais être clair, c'est que
I'll be clear. Nuclear valves is a very specific speciality. Even though we do have now some fairly technical products on our lines, we don't intend in the short term to go into the nuclear sector in terms of valves. Very often in this field, the manufacturer is in direct contact without middlemen with those who build nuclear power stations, and they're so highly technical and so highly specific that that you have to be in direct contact with them. So my answer will be no. If it had been yes, I wouldn't have told you because it would have been confidential. It would have been confidential information. What would be the consequence of inflation on Thermador's results? Next question. The same as for 2022. In a period when volumes are practically stable or even slightly down, it means that opportunistically turnover levels can be maintained because of inflation. And as I said earlier, in 2023 we're going to be passing prices on again to our customers. Of course, the following question will have a negative impact on margins. In 2022 we had a slight drop in margin, in a commercial margin, and we hope to claw back some of that loss in 2023. So the euro-dollar exchange rate is helping us in 2023, the opposite of what happened in 2022. So I think we can there's a trade-off there, and we can counter those losses. There's about 37% of our purchasing is in dollars. You talk about the VMC double flow. Will Thermador include the supply of adiabatic double flow VM mechanical systems? No, we're exclusively working with models with thermal exchanges, and I think that all VMCs, dual flow VMCs, and those carrying the NF label have heat exchangers in them, so we're not going to change. I'll ask Lionel Gray, who's in charge of XLR. He may have more precise information on the subject, but for the moment we don't have any specific products available on that market. A question from Eric. Hello. The drop of almost 10% on Thermador Groupe's share since the AGM. Does this suggest a high level of liquidity amongst the big investors who are preparing for a drop in the share price? No. As I said before, the mechanical effect of distributing a dividend, there's a drop in the share price. Here you're predicting a bad year. You could be right, but I wouldn't interpret it negatively for the moment. It's a short-term effect. We are focusing on the long term, of course, in our strategy. It's clear that if today we felt that the growth of the group was going to be worse in the next 3 months, some investors may want to take their profits, may want to buy out, and we'll see that, of course, in the months ahead. Question from Christian, an employee of the group, about our carbon footprint. There are different work underway in the subsidiaries. 95% of our carbon footprint come from the products of the group. In the next 5 to 10 years, how do you think we can reduce that percentage? That's a trick question, because we already said in the AGM that it's one of the subjects that's a really important subject that we need to work on in 2023, and clearly we need to commit to this indicator, this extra financial indicator number 13, and we have to be able to say how much we can reduce our carbon footprint between 5 and 10 years. And I can tell you, it's really not easy. So, Christian, I'm sorry, but I can't give you the answer this evening. Work is underway, and we've committed to to fix our objectives before the end of the year and communicate that to all our shareholders. Of course, we have to work with our suppliers to reduce the carbon footprint. And I think Christian is part of one of the companies that has already started. And we can see that the results are difficult to measure when we're working on materials from scrap or recycling, when it's our suppliers who decide all that. So it's very difficult to predict now. There's a diversity in our products that come out of our subsidiaries. It makes it more difficult. So Romain asks you a question. He's asking if 9.6% of costs, no, 9.6% is an increase in prices passed on to customers, to be precise. Is that, and so 5% estimated for the whole year. Does it include the 4.62% of the salary increases? Be careful, that was for 2022, and now we're talking about 2023. So, of course, when we pass on price increases, we do take into account the price of products, which is the case today in general terms, but also, of course, in other costs, such as structural costs, such as wage bill and transport, as Patricia said. And because that leads to an increase in costs. So we have to pass those on to our customers. So when we talk about inflation and passing it on to customers, of course that covers the cost of products that may change, but also the structural costs, which can change to transport, the euro-dollar exchange rate, and salaries. Lionel asks, what is the profitability of DPI? When we bought DPI, we gave figures on that when they joined the group. And we gave an objective profitability level, fairly low level, much lower than the average for the group and the other companies of the group in terms of profitability ratio, operational ratio over turnover, but the ROCE, which is an interesting figure, which we communicate once a company's been in a group for 12 months, and another ratio which is quite remarkable in that company is the turnover per person, which is very high per employee. They have a notably different business model because DPI has no stock. They use the flexibility of the Italian, German and Spanish factories, which are all in Europe, of course, that they work with, to be able to deliver directly to their customers and to work sites directly from those factories. So I answered the question, but I would remind you that one of the key ratios is not profitability or ROCE, but return on capital employed, which for us includes the management of the capital and the cash of the company, the equity and the cash of the company. And over the long term, that gives a better picture of the value of the company. And profitability is part of that, of course. Part of ROCE. It's one component of it. I've got no more questions. It's 18:29. No questions from our English listeners this evening. From Jean-Pierre, who's a shareholder and who's very familiar with the company.
Alors, Patricia,
So, Patricia, did I understand the increase in price on purchases from suppliers are finished for the moment? Does that mean that for all sorts of reasons that I'm not asking you to specify, is material inflation reached a ceiling point? So, yeah, it is finished because we're not sure whether there may be some drops in prices or if it's plateaued. But that's one of course, the copper price is very important in terms of our purchasing prices. Also, transport compared to purchases. Container prices have fallen a lot, and we've, of course, benefited from that at the end of 2022, the beginning of 2023. I'll complete Patricia's answer. Here we're talking short term, and we know very well that longer term materials are going to cost more and more, all metals, because first of all they're finished, and copper, for example, but it's true for nickel, aluminium, molybdenum, and also to some extent steel. All these metals are going to have to be decarbonized, and that will make them cost more. So longer term, we know that there'll be an increase in raw materials, but clearly at the beginning of the year, now at the moment, the trend is pretty stable, and some have fallen. And also China, of course, the growth rate in China is not as good as they had hoped, and so mechanically this affects export, and so they either will suggest lower prices or variations of prices. So that's another reason that we've been able to benefit from that, and of course the euro-dollar price. What about the synergy of DPI with other subsidiaries? Jean-François? So we've done things, fairly simple things, fairly efficient things, understanding of customers, so that our subsidiaries work on similar markets, Ilos, Sferaco, Jetly, but also PBTube. They're working with the same sorts of customers that are customers of DPI but not of other groups, or vice versa. So that has been done. There's a few steps that have been made with suppliers of DPI who are not suppliers of the group. So we've led a certain number of actions in those areas. Those are the main synergies that we've been able to put in place. And as Jean-François knows, it takes time. But of course, DPI can benefit from our reputation as a big supplier. And in public works, DPI may be able to benefit from the notoriety of the group with, for example, Thermador. And one particular area which interests us is heat networks. I think you've heard of those. It's something that is very old, but today has come back into the news because it's virtuous in terms of energy. It's a source of heat production for a whole district, or a source of production of cold water for a whole district, supplied by a network, or a large network. And it happens that DPI is very familiar with the customers who are the installers of those networks, and also other subsidiaries from the group have got products can be sold to the substations in those networks. So that's a way of using the synergy and to exploit the demand that is there. Raymond
nous demande, nous dit, nous avons reçu un questionnaire.
He says we received a questionnaire concerning the 2023 AGM. Are we going to hear the results of that survey? Of course, Raymond. If we ask you to comment, to get your, of course, to get your opinion, of course we'll feedback. So Aurore is working on that survey, and she will give you a feedback certainly to all the shareholders. And I have an idea. I'd ask Aurore to include it. Would you be interested by a putting back the AGM back by 1 hour so that people could more easily get to the meeting in Lyon and have it, for example, at 6 p.m. rather than 5 p.m. So we changed the organisation a bit. This year we organised a bus to be able to transport the employees to the AGM, and that was great because we got a lot of people came from the company, so it's great because they are more involved. And we were at the Quai des Célestins and at the theatre, so it was easy to get there with transport provided. And that organisation helps because employees could be put off coming because it's difficult to get to the venue. So the participation level of 76% was really fabulous, and we had 170 people present. So I think we've gone through the questions. As you understand, we had a bit of a challenge. We tried to not use little ticks in the expressions we use, like in fact and by the way and so forth. So it's now 18:47, and I suggest that we now close this webinar, and I wish all of you an excellent evening. Good evening to all of you. Bye bye.